Good morning. I'm adjusting my camera a little bit because I feel like I've got, don't want to get too close to it. That's kind of scary, but I feel like I had a bad angle there. Welcome, everybody. Now I feel like I'm too low in the video, but before I felt like I was a little too high in the video. I'm just struggling this morning trying to figure this out. I don't remember moving my computer around anywhere, so I don't know why it's so off, but regardless, welcome. Glad to have you here. I know most people listen to this podcast, they could care less what it looks like, but a few of you watch the video. For some reason, I've been told I have a face for radio. So for those of you that have to watch me in that respect, well, thanks for doing so. And sorry you have to look at me as we do this. It is Tuesday, the 28th of May. We are just coming off of a holiday weekend, the Memorial Day weekend. I hope everybody had a great Memorial Day weekend. Obviously, no new episodes yesterday of Moving Markets. And we've got a very interesting thing going on today in the market. The Dow Jones Industrial Average started. By the way, it is almost 9 o'clock a.m. Mountain Time, so almost 11 o'clock in the morning on the East Coast. The Dow Jones Industrial Average started trading to the upside this morning. In fact, it was up at one point in time 126, 127 points. Right now, as we speak, the Dow is only up 12 points. In the first hour and a half that the market has been open, there has been a tremendous slide from being up 126 points to barely being on the positive side right now. The NASDAQ is still in positive territory, but the S&P, it's incredibly flat. It's down like 10 cents a share, but it's moved into negative territory ever so slightly. It's on the verge of going back into positive territory. And some of this is just the fluctuations of the markets, but that's a pretty big sell-off to go this early in the day, to go from being up 100 and almost 30 points to being only up 15 to 18 points. That's a pretty big move early in the day. As we open trading this morning and things begin to move to the upside, the real, in my opinion, the real news is simply that people are buying the dip a little bit. We've had 5 weeks in a row of sell-off. Only one of those weeks was a really deep sell-off. We've had 4 other weeks where the Dow Jones has sold off slightly, but it's the first time since 2011 that the Dow has posted 5 consecutive weeks of negative movement, of selling off. And you can't just look past that. You can't discount that as like no big deal. It is kind of a big deal. What's less of a big deal is that the move has only carried us down about between 4 and 5%. With things moving even just a little bit to the upside today, you've really got a situation where you've only had about 4% of downward movement, and the biggest amount of that came in 1 week. 2 weeks ago, I think that we ended down about 3.5 or 4%. So when you're only down 5% or less, and the bulk of it came in one single week, it seems a little more ominous than maybe it really is to say that we're on a 5-week slide. But again, it's not something you ignore. It's not something you completely dismiss out of hand. By the way, before we go any deeper into the program, another shout out to the military and to our servicemen and women, as well as our civil servants, our police officers, and our firefighters. Celebrated Memorial Day weekend with my family over the weekend. I'm very grateful to the men and women who have put on the uniform of this country, and especially those that have sacrificed their lives and made that ultimate sacrifice. Shout out to you and thank you. We are grateful for the service that you've rendered to this country. I had a very enjoyable weekend with my family. We went to a local cemetery. We have one relative that is actually buried in that cemetery, but we spent a couple hours there walking around, reading some of the gravestones. The community around the cemetery did a fantastic job. They put up small U.S. flags at every single headstone where a member of the military had served, whether they had died in service or not, where anywhere that somebody had served. And we looked at some people that had served. We looked at some gravestones of people that had served in World War I, a lot in World War II, a number of people that had given their lives in the Vietnam War and the more recent conflicts in Iraq and Afghanistan, the Middle East. So we thank all of them and their families for the service they've rendered. Okay, I forgot to mention that right at the beginning of the presentation. I didn't want to not get that in. We're going to continue to do that right through the end of this week. We've got 3 more days after today that we're going to continue a salute to all of the men and women that have served the country. And I even though it's not what Memorial Day was specifically designed for, I think our police officers, city, county, state, I think they are all incredibly underappreciated. Even people who are glad they're there oftentimes are still upset when they see a police officer on the highway and they have to slow down their speed. It's like, I want you around to help me out when I'm in trouble. I just don't want you watching me to make sure I'm obeying the law on the road. It's kind of ironic, but I think deep down most of us are appreciative of what they do. I think they get unfairly treated in the press a lot, but I include them because I'm very appreciative. I've got some very good friends, some family members, and we've known of some families that have lost fathers, mothers, sons, daughters, brothers, sisters in the line of duty as police officers and also as firefighters. And so we appreciate very much what you do. Okay, so everything is back on the positive side now. Dow's climbing back up a little bit, but the markets are moving mostly just on this dip that we've had over the last 5 weeks. People have a tendency to sell off of it a little bit in May. Traditionally, May is one of the weaker months in the market. I think the other one is traditionally October tends to be a weak month, just ahead of when you start getting into the heaviest retail season around Christmas. You have a little bit of a disappointing September and October, but people have thrown around the phrase "sell in May and go away." It's kind of this notion that people are liquidating their portfolios in anticipation of heading off to the summer holidays, and there's some truth to that. That could be partially what happened the last few weeks. The China trade talks. I don't know that things have gotten any worse, but they certainly have not gotten any better. The Chinese government, some Chinese news organization put out an article over the weekend saying, "Hey, what the U.S. has been asking China to do flies in the face of what our country's philosophy is." China is trying very hard to be a communist government and a democratic capitalist society. Well, not democratic. I shouldn't have thrown the word democratic. They're trying to be a communist government and a capitalist economy. And they've gotten away with it to a small extent for a period of time. But the reality is this: you cannot sustain both indefinitely. You cannot sustain both long term. And when I'm talking long term, I'm talking for a half a century to a century. China has gotten away with it for a handful of decades. When they joined the World Trade Organization, I think at the early part of this century, China was given some privileges by the World Trade Organization. They were given the ability to have some subsidies and some exceptions to laws and rules to help this emerging economy come into the forefront and be a larger part of the global economy. China has taken advantage of that, and they've continued to do things that they should not be doing any longer. And so they're kind of, as a direct defiance of the privileged treatment they got by the World Trade Organization, they've just continued to take advantage of other companies, or other countries, excuse me, and then they play unfair. And this article that came out, that was published in one, I guess it came out either as a TV or a newspaper article on one of the larger media publications in China. It really showed that the attitude in Beijing is that we don't intend on changing. We're not opposed to trying to negotiate trade tariffs. We're not opposed to negotiate, and this is my interpretation of the article. We're not opposed to talking about buying more of your soybeans and sort of maybe becoming a little bit more equal in terms of our trade deficits and so forth, things like that. But what they're very unwilling to do is something they agreed to do with the World Trade Organization when they were allowed entry, and that is that they would stop that they would lessen government control over private industry, that there would be fewer, not more, state-sponsored businesses. You cannot run a business in China, even if you are considered a private industry. You cannot run a business headquartered in China and expect that the government is not going to be heavy-handed and very heavily involved in what you're doing as a business. And to stay in business, you're going to have no choice but to probably at times do things that maybe from a pure business ethics standpoint you would rather not do. An example of that we've talked about multiple times is the theft of intellectual property. The theft of intellectual property is a big deal. When you are an inventor, when you are an innovator, when you develop something and you patent it, and then you discover that I've got this product, I've got this great little widget, and it's very popular and it's starting to sell and there is a demand for it and it's unique, and I have created a technology blueprint for this that I have patented now. Anyone that tries to make this is either going to have to pay me a royalty on this patent, or they're going to be prevented from making it so that I get the lion's share of the profit that's made off this. That should be the rightful reward for inventing something, for having the intelligence, the drive, the motivation to come up with something. You should get the lion's share of the profit. Or allow other companies to be profitable off it, but make sure they're paying you for that patent. Make sure that you're getting compensated for being the one that came up with it. That's part of capitalism. That's good business. That incentivizes people to invent things and come up with new things that make our lives more productive, more enjoyable, easier. We have conversations in my home once in a while about younger generations and how there's so much technology and so much information at their fingertips that they become lazy. I would say that a lot of this technology has allowed us to become more productive. We can do things that we couldn't formerly do. I can run a small business mostly from my home office. I have an office outside my home, but it's not a big office. I don't pay a huge overhead. I have employees that are able to work from home. Because we have the technology that allows us to do this, and that allows us to do other things at the same time. I can go on vacation with my family and do most of my work from wherever I'm traveling to. I couldn't do that 20 years ago or 30 years ago. It wasn't possible. So, the people that come up with these things that make our lives easier, I'm okay with them being rewarded. China wants to, when a company says, now I've got this great widget and there's a demand for it, I'm making money for it. And now I discover that oftentimes it's because of wages being as high as they are here in the United States. It's because of government interference through overregulation. They say, well, gosh, I can manufacture this widget for $1 here in the U.S. and people seem to be willing to buy it for $2. But I can go manufacture it in a plant in China for 25 cents. And even when I pay to have it shipped back over here, and even when I pay a tariff on it coming back over here, my net cost is still down in that neighborhood of 50 cents instead of $1. And maybe I'm paying 35 cents to manufacture it, and a 25% tariff is raising that by another $7.50, $8, or excuse me, 8 cents, 7.5 or 8 cents. So my cost is going from 35 cents up to 43 cents instead of $1 that it cost me to manufacture it in the U.S. And then I pay 7 more cents to have it shipped over here. So my net cost, including shipping it over here, including tariffs, is only 50 cents instead of $1. So I'm going to have all my widgets manufactured in China. And then I capitalize still on the U.S. market where the demand is currently. And even by the time I've shipped it over to Europe and down to South Africa and South America and parts, maybe some of them end up getting shipped back to China to be sold there. But in the process of all of that happening, I'm still better off. On $1.50, I've got, or on 50 cents product, I've got a markup to $2 instead of $1 product markup to $1. So this is what happens. Now, China comes along and says to their company that's manufacturing the widget, whether it is a Chinese government-owned operation or whether they're just heavily influenced and controlled by the government, either way, they're told, look, once you've got this technology down pat, we're going to mass produce it and ignore the patents. That's intellectual property theft. In other words, we're going to take that patented information and we're going to produce 10 times this number of widgets, and we're going to produce them under the name of Chinese companies, and we're probably going to mostly sell them here in China, and we're going to sell them to our friends in Russia, and we're going to sell them to our friends in some of the other neighboring countries. So they're never going to be shipped back to the United States. So it's not even the US consumer that is the ultimate beneficiary of a cheaper product, even though it's at the expense of the company that invented the widget. It's now China is flooding the markets worldwide with a cheaper product that they, technically speaking, should not have the right to even manufacture or make. That is what intellectual property theft is. They simply steal that technology, mass produce that widget on their own, sell it to other countries that don't really care that they're violating the laws of international trade laws and so forth, and patent laws. And companies lose millions, billions of dollars. US companies have been losing billions of dollars for a lot of years through this practice of China. In other cases, they're a little more transparent about it, but it's still very unfair. The Chinese company will just say, yes, we will manufacture this product for you and we will do it cheaper, but the only way we will do it is if you will contract with us that you will share this proprietary technology information and allow us to make a certain number of these without charging us for the patent, without saying that we have in some way violated your patent. And so it's the same thing. They're not stealing it. They're just forcing you. They're saying, if you want to have the product made over here and you want to have it made cheaper, it's going to cost you, you're going to pay. So either way, they end up with that manipulation of the currency, or not the currency. They end up with that their hands on the technology for having not been the ones who innovated it and made it and came up with it in the first place. So all in all, it's a bad deal for the US to do this. But a lot of companies in the United States that have their widget manufactured in China and shipped back over here to be sold, they're willing to do that. They're willing to take those knocks, knowing that it's not set up in their favor, knowing that they're going to come out on the losing end of that. They're willing to do it anyway because it's still, at the end of the day, is cheaper than having the product manufactured in the United States. When our government continues to put on stifling business regulations, when they continue to let unions dictate wages and costs, that causes the cost of manufacturing that product to go up, and then we send the manufacturing over to a foreign country, and there are fewer U.S. jobs. A lot of this has been partially eased and partially offset with the deregulation that the current administration has been so focused on. They've made it easier for companies to manufacture their product here, maybe at a slightly higher cost, but not so much higher that they don't see the benefit of providing more U.S. jobs and in many cases becoming a more popular company. Because I got to tell you, I, for one, I go out and buy what I need. I go out and buy the best quality product, regardless of where it's manufactured, regardless of the company that's making it and distributing it. And I'm not the type of person that calls for boycotts of certain products or certain companies, although, I don't mind expressing my opinion when a company really ticks me off for something that they're doing that I think is very anti-American. But when all things are equal, if I see two products that are relatively equal in quality, they're fairly equal in price. They one of them doesn't give me a significant advantage over the other one, and one of them is made in the USA and one of them is made somewhere else. I'm buying America. I'm going to support more American business, and I'm going to support more American workers. That's just what I'm going to do. I'm not going to do it at the expense of getting a good product, but I'm going to do it when things are mostly equal. And if we're talking a few percent, 4 or 5, maybe up to as much as 10%, I may even be willing to pay a little bit more for that product that's made in the U.S., just as my way of supporting the U.S. manufacturer and a U.S. product, a U.S. company and a U.S. worker. I'm willing to do that. So, a lot of this problem can be solved and eased if there were less regulations on businesses that want to manufacture their products here in the United States. And some of it's going to get fixed if we continue to hold our ground in these trade wars and say we're not giving into what China is doing anymore. We've talked about this before in the program. In the short run, there's going to be some pain for some U.S. companies, and they're going to pass along and share some of that pain with the U.S. consumer because tariffs are going to affect products coming back into the United States that are U.S.-owned products that are just being manufactured over in China. But eventually, companies are going to stop having their products manufactured in China. And that's where China is potentially going to feel the pain. When the president says these tariffs are hurting China a lot more than they're hurting us, he is talking long-term. Maybe it's a little bit of political spin, and he's glossing over the fact that there is going to be some shorter-term ramifications to the U.S. consumer. The bigger picture and the longer term is that it is going to hit the Chinese when more and more companies pull their manufacturing processes away from China and do it in places like India, places like Vietnam, places like South Korea, places like Indonesia, the Philippines, more in Mexico, more in places in Africa. I think you're going to see some economies start to emerge in Africa where they're going to be more and more willing. The challenge there is places where the governments are stable. But in some of the African countries where the governments are more stable, I think you're going to see more U.S. manufacturing jobs go there. But the U.S. is going to watch it closer and say, look, we're not going to let you get away with what China got away with if we start shifting some of our manufacturing over here. But these things take time. It's a 1 to 2 year process in the best case scenario for a lot of these companies to shift their manufacturing or the bulk of their manufacturing over to these other countries. So that's what we may be in for. I'm going to spend the rest of this week talking a little bit more about some of what is going on with China and how it affects trade and how it affects us. I'm not going to necessarily make it like a multi-part series the way we did with socialism last week. And if you haven't already done so, go back and listen to those episodes last week. I've got one of my employees working on one longer presentation that we may put in as our podcast for that day, that is the highlight clips of the lies of socialism, and we'll put that together in kind of one compilation for people that want that. I've got a lot of good feedback from that, so thank you for that. Tell all your friends about Moving Markets. Tune in, listen to us daily on Apple Podcasts. You can find us on the iTunes Store. You can find us on Google Play. You can find us on Stitcher. We are trying hard to get on Spotify. They're becoming one of the other big providers of podcasts. And then you're always welcome to come to safeoptionstrategies.com and either watch or listen to the video or the audio podcast, respectively. Thanks for listening. Tell all your friends about us, and have a great day, everyone. Thank you. Bye-bye.